Hey everyone, Meet Kevin here. While we wait for stimulus and, well, I can't shave, may as well take out Thor's hammer. But in the meantime, I did sell some stocks today, and in this video, I'm going to explain why. See, those of you in my course already know why, because we talked about it this morning, but for everybody else, you might be wondering, wait a minute, Kevin rarely sells stocks. The sell button is usually broken. What is going on here? What does Kevin know that we don't know, if anything? Well, here's the gist, first of all, of what the heck is going on in the marketplace. This is the gist of what you're going to hear in the media, and then I'm going to give you the Meet Kevin insights. So, here's the gist. Great Britain is calling for a Marshall Plan to contain the virus because cases are spiking. Trump is overly ambitious on a vaccine that we don't know will be effective. If Europe sees a second wave surging, especially in a country like Spain, which had the virus beat and is now worse off than it was in March, then what does that mean for the United States? Are we a ticking time bomb? Banks helped rich people get richer by laundering money. Oh yeah, I feel like that's always been happening. We still don't have any stimulus money. A Supreme Court justice just died, spawning a vicious debate over when Ruth Bader Ginsburg's seat will be replaced and by whom. We're 43 days away from a terribly divisive election. People are starting to use margin loans more than ever before to speculate on the stock market. We're about to face a government shutdown in 9 days, and so far Congress has no hopes of passing a continuing resolution to keep the government funded, thanks to lawmakers apparently agreeing to a verbal deal on Friday, but then backtracking today. We still don't know exactly what's going to happen between TikTok and, well, the companies in the United States who are supposed to be involved in helping this sort of takeover, and how that'll ever impact US-China relations, which the last thing we need is another trade war. The Fed is freaking out about how we're possibly going to have a double-dip recession unless Congress gets some fiscal support going, because the Fed's basically out of tools. I mean, Jerome Powell, other than cranking the money printer every single day, can't understand why inflation's not going up, and also can't explain why the Main Street lending program sucks, and I'm out of Topo Chico. So, still no wonder why stocks would pull back today. Look, this is normal. This is the way things work around here. Stocks go up and stocks go down. It's the emotional roller coaster. In fact, we often refer to the stock market as a graph of human emotion. Stocks go up and people panic buy because of FOMO, or SOMO, sadness of having missed out, which is almost like worse than FOMO. It's an annoying roller coaster. People panic sell because, well, everything's red, and when things are red, it's painful, and red is bad, green is good, right? Well, anyway. That's the way it's been, and that's the way it'll always be. So what do we actually, what can we glean from this? And what are our expectations going forward? And why the heck would I sell? And what should we do going forward? Here's the scoop. Futures for tomorrow are already slightly green, so that's good. However, if Tesla ends up diving after Battery Day, I would not be shocked to see the entire stock market follow Tesla down even more. Kind of like in September, early September, right when Tesla and Apple had their stock split, the market went on for like another day, day and a half, and then all of a sudden, right? That was not good. It led tech like straight down over the last few weeks here. And, you know, who knows? Maybe things will trickle back up, but it wouldn't be a surprise to see tech kind of continue to go back towards maybe, shall we say, realistic valuations. The last couple months have been a little crazy in the tech sector. Now, in fairness, I'm heavy on tech. I've sold all of my recovery shares somewhere around 60 days ago, and the only stocks that I personally really buy and recommend buying, even though they're tech, are, well, mostly tech, are the ones at metkevin.com/1337V11. Those are my favorites. You can go there, metkevin.com/1337V11. But why would I sell? I mean, is it possible that if the market keeps trickling up, I just sold low? Or what if Battery Day goes poorly, or maybe it goes well, but the stock market goes down, which is common for Tesla on an announcement day, and that drags the rest of the stocks down lower? Am I trying to time the market to perfectly get out and get in? No. In fact, here's why I sold. And I just want to put this out there because I always want to be as transparent as possible with what I'm doing. When I started buying stocks like crazy in March and April, I promised that I would ride the stock wave, and as soon as I needed money to buy real estate, I would sell, hopefully with a profit. And that's what I'm doing. I'm closing 3 large real estate transactions, and I really want to post more real estate videos, but I don't know. It doesn't seem like too many people love the real estate, but I will keep trying to post real estate videos, so stay tuned. Don't get discouraged. But anyway, I'm closing 3 large transactions. I'm excited to break down all of these transactions, whether they get views or not. 2 houses, and one is a 3-unit building that I'm going to turn into a 6-plex, so stay tuned for that. That's going to be a fun project over time here. So I guess I'm not really getting out of the market. I'm just kind of diversifying over into real estate, which was my intention from the beginning anyway. Now, I'm grateful for the gains, and I'm bummed that I'm going to have to pay taxes on the stocks that I did buy this year and then sold. And you know, overall, I think as a channel here, we've been pretty decent. You know, we talked about getting out of Nikola around 45 to 50. We talked about getting out of Dave & Buster's right around where I recommended the buy-in. Somewhere around 1850, we were able to get out of there, so that's nice. I've been warning about getting out of recovery stocks. That sector's been beat hard, but you know what? It might come back here soon. You just never know. Tech, though, is always going to be something that I want to continue investing in for the long run. So, the big question and the big bottom line going forward out of all of this. I talked to y'all this morning in the private live stream, and for at least the course members who are part of the course, about whether or not you should sell or should you buy. What should you do? And so this is where I want to transition to the entire video to you. What should you do? Well, know this. I may have sold 15% of my holdings today, but that's only because I'm closing real estate within the next 2 weeks, and volatility right before closing is not a good thing. So I needed to take some money out and have that ready to buy. I'm still 85% in the market. I'm still extremely heavy on Tesla. I still love my 1337 V11 Pi. And my goal is, hey, come Thursday this week, come Thursday next week, which is payday for the YouTubers, I will continue to buy my 1337, and hopefully we'll be able to buy in weakness. So if you're wondering, should you sell? Is this the end? Is it going to go down more? Well, I don't want to give you a 100% definite answer, but my general recommendation is don't let this panic be any kind of opportunity for you to say, that's it, I'm getting out. The last thing I want to do is move my money to cash right now. If you're paying off high interest rate debt or you're paying off margin because you are sincerely worried about a second wave, that's okay. If you're shifting it into real estate, that's okay. So should you sell? Should be answered with, what are you going to do with the money? So should you sell to leave it in cash? No, because then you're going to pay taxes, and I wouldn't do that. I wouldn't recommend that. I don't want to tell you what to do. Should you sell to pay off credit card debt? Yes. Should you sell to reduce your margin to less than 20% or honestly 0? Yes, that's a good idea. I like reducing margin. I'm almost completely margin free. I have been paying down my margin for the last 3 months. I'm stoked about that. We'll have to have like a debt-free scream after I'm done. But anyway, paying down margin, yes. Paying down, student loans or car loans or something that's probably more expensive than 4 or 5%. Pay it off. And here's the thing. Why would you pay off a car loan even at 4% or 3%, you might be wondering? It's going to open up the doors for you to buy real estate. When I was 19 years old, I had a car loan. I had a Prius that I financed completely. I paid it off to be able to buy real estate. And I sold my Apple stock when I was 19 years old to pay off my Prius to buy a house. Looking back, it's like, oh my gosh, but if you had kept that Apple stock, it would have been worth so much more. Yeah, you're right. That 20 grand would probably be worth, I don't know, $150,000 or something like that today. But I use that money to control way more wealth with real estate. Real estate's always my bread and butter. So generally, I think y'all know me. I am the buy and hold dude. I am the buy on red day dude. I am the dude who says the sell button is broken. But I will unlock the sell button when I need to transition to either get off margin, bad, or get into real estate, good. So hopefully that helps you. I'm gonna go refill the topo. Has nothing to do with the t-shirt that I'm wearing in terms of what we're gonna do right now. Anyway, thank you so much. I hope you enjoyed this video, and folks, we will see you next time.